We are live, so we can start.
Right. A very good evening, everyone. I am CA Mohd Subbarao, Chairman, Committee on GST and Indirect Taxes Committee of SIRC of ICAI. And I welcome you all along with the speaker, CA Mohammed Irshad Ahmed, who is also a committee member of our GST and Indirect Taxes Committee, for the webinar on GST Annual Returns. CA Mohammed Irshad Ahmed is a practicing fellow chartered accountant with over 17 years of post-qualification experience. He exclusively deals in GST and related matters and is regularly engaged in large corporate houses, government authorities, public sector units, high net worth clients, etc. on tax consulting and litigation matters. He represents several clients before the tax authorities on various matters. He also handles international VAT assignments in UAE and other GCC countries. Mr. Irshad is currently a partner in MIA Associates, Chartered Accountants, Banjara Hills, Hyderabad. He worked with KPMG and has handled a variety of clients, including multinational companies in different sectors. Irshad is a member of the Grievance Redressal Committee formed by the Central and State GST Departments, Hyderabad, Telangana. He is a member of GST Committee of SIRC of ICAI for the current year. He is a co-chairman of Indirect Taxes Committee of Federation of Telangana Chamber of Commerce and Industry, Telangana. He is a founder member of Confederation of GST Professionals and Industries, Mumbai. Irshad is a regular guest speaker on GST at various forums, trade associations, and professional bodies, including ICAI, ASSOCHAM, ASCI on GST. He has addressed several GST training sessions under the certificate course for GST conducted by ICAI across Telangana and Andhra Pradesh in 2017 and 18. CA Irshad is also a law graduate and regularly gives several recommendations and suggestions from the time to time to government on critical matters on GST involving trade and the economy. He is a guest faculty with the NACIN and has addressed several GST officials on various topics. He is a member of the IDT study group on indirect taxes formed by IDT Committee of ICAI 2016-17. Member of the team which prepared the background material on GST by the IDT Committee of ICAI in 2017, a popular GST reference manual across various industry sectors, government departments, and professionals in India. With this brief, I now request Irshad Ahmed to go on the GST annual returns. Please, sir.
Hi, good evening to all of you. And I thank you so much, sir, for your valuable time and a brief introduction of myself. And I congratulate SIRC team for conducting this seminar today, chairman of SIRC as well. So who has taken a timely initiative to conduct this session when we have a due date falling on 31st December in the next 10 days or so. So I hope I'll try my level best to explain various contents of GST and 9 intricacies, etc. and etc. And should you have any questions, we can take up questions at the end of the sessions. And in between, you can also post your questions in the chat box, which definitely I will take up at the end of the session. So with this brief introduction, now I'm just starting to share my PPT. So I hope you are able to see this PPT.
Yes, sir.
Yeah. So first come first. The recent changes as far as due date remains the same. It is 31st December 2022. As far as threshold for filing GSTR 9 and 9C is concerned, just a refresher to people who are looking at this for the first time. Up to 2 crores, GSTR 9 or 9C, both are not applicable. So therefore, the registered persons who are registered as composition taxpayers, for them GSTR 9 is not at all applicable. Neither 9 is applicable nor 9C is applicable. So they need not worry about filing of GST annual returns. The people who are in composition scheme. So after 9 crores up to 5 crores, 9 is applicable. After 5 crores, 9C is applicable. So in short, up to 2 crores, no one has to file any return. Between 2 to 5 crores, GSTR 9 shall apply, and after 5 crores, GSTR 9C and 9, both of them will apply. And another update, government has been making suitable amendments from time to time. And for financial year 2021-22, they have notified several amendments in the month of August of this year, in the year 2022-23. So the rules have come up. So whatever reliefs that were given in the financial year or the last year, some of them are continued. A lot more of them have been withdrawn. So I will cover those reliefs as well as we move into our topics. I will take you through what are the reliefs that have been continued, what are the reliefs that have been withdrawn. I just explain you. And of course, as we all know, certification by a chartered accountant is not required in 9C. However, as we all know, chartered accountants are very much involved in filing process. So GSTR 9 and 9C are such a forms where you cannot just take a start by logging into the portal and start filing the returns. There are certain preconditions that have to be fulfilled. You have to get ready before even you attempt to file the returns. So I will just take you through a couple of slides, 2 to 3 slides, which are very, very critical, which has been compiled by me based on my experience. So I would draw your attention to these points, and these are at most important before you attempt to even file the returns. And as a consultant, these are very much important because unless and until the client gives you this information, you cannot start your work. So therefore, if you have to decide a timeline on when you have to deliver GSTR 9 and on 9C, first and foremost, you should know what information the client has to provide, what information you should have it before at your disposal, before you even attempt to file 9 or 9C. So first and foremost is audited or unaudited accounts for the financial year. For filing GSTR 9, there is no requirement to have audited accounts. But for filing 9C, if your turnover is more than 5 crores, you need to have audited accounts. And along with that, the most important thing is you need to have sales ledger, purchase ledger, stock ledgers, all other ledgers from which data is extracted for filing GSTR 9 and 9C. When I say all these ledgers, obviously I mean to say these ledgers are not available in audited accounts. Is it not? Since these are not available in audited accounts, you have to have these ledgers separately from the client, which should match with your audited accounts. Ideally, you need to have the accounting application based on which audited accounts have been prepared. So if you have an accounting application, you can extract all these ledgers. And most importantly, whatever backup that you receive from the client, that backup should tie up with audited accounts. So why I'm stressing that it has to match with audited accounts? The reason is because quite many times what happens, auditor finalizes the accounts, they make final adjustments in Excel sheets outside the accounting system. And then what happens, all these adjustments will not be updated in the accounting system. So therefore, accounting system may not be updated, may not tie up with your audited accounts. So in all those cases, what happens, before you even attempt to file GSTR 9 and 9C, you should obtain audited accounts and you should make sure the backup accounting application that you are getting from the client is the same which has been finalized for preparing the audited accounts. So this is very important, so that because what happens, once you start working, you extract ledgers, you extract information from the accounting ledger, and having extracted, if you discover that the accounting application, the ledgers are not tying up with the audited accounts, you will end up huge amount of time. So first and foremost, make sure you have this information at your disposal. And the second thing is you have to extract the information in the relevant formats. As I have stated in the put up in the slide, there's B2B, B2C, exports, advances received, pending for adjustment, and ITC ledgers subdivided into inputs, input services, capital goods, etc. and etc. See, this is very important. Getting the numbers is also important, and more importantly, getting numbers in a required manner is all the more important, because if you don't get these numbers in this particular classified manner, then you will have to prepare this information, and it will end up lot of time for preparing this information. Instead of working on multiple clients, you will end up finishing work for only one client. So therefore, first obtaining all these ledgers, audited accounts, and all those accounts has to be in the particular manner which is required for filing GST 9 and 9C. And third important thing is, you should also know what are the adjustments that have been done after the financial year. Why I am saying, as we all know, once we file GST return for the month of March for any financial year, we cannot go back and revise that return. However, we may be filing the income tax returns in the month of July, or we may be filing the income tax returns in the month of October, or we may be finalizing companies' accounts in the month of November or October, whatever it may be, as the case may be. So while doing this, we may make several adjustments in those accounts. So those adjustments obviously will not figure into the GST returns, because those GST returns would have already been filed. But all these adjustments pertains to the last financial year 2021-22. So therefore, the details of these adjustments shall also be obtained before you attempt to even file GST 9 and 9C, because either you have to pay the required taxes, or you have to report these adjustments at suitable places in GST 9 and 9C. Moving to next slide. So another important thing is reconciliation between GSTR 1, 3B, 3B versus 2A, 2A versus 3B is very, very important before you attempt to file the annual returns. And my second point is linked to the first point. You should try to obtain the factual and correct information for filing the annual returns. When I say factual and correct information, what I mean to say, as I've stated in my first point, there is GSTR 1, there is GSTR 3B, 2A is there. You will have Tally or any other accounting system, or ledgers extracted from SAP or from Focus or any other accounting application. You will have GST workings which you prepare every month for filing GST returns. So there are all these sources from where the sales data, the purchases data, etc. and etc. is available. So what happens when you extract, let's say, sales data from all these sources? Quite often what happens is the sales data, sales figures will not match from one source to another. For example, there is a sales figure of 1 lakh rupees in Tally, but the sales figure reported in audited accounts could be 1,10,000 or 1,15,000. And if you go to GSTR 1, the sales figure could be 90,000. So you will agree with me that this is happening, and this happens quite a lot of time. The sales figure from various sources will not match. So what will you do in this situation? The question before us, before the person who is filing the return, is which information has to be looked into? What has to be adopted? Do you have to take up the audited figure? Do you have to take up the figure which is reported in GSTR 1 and auto-populated in GSTR 9? Or do you have to take the figures from your books of accounts? So which figure you have to take? So the point here is, you should always strive to extract that information which is factually correct, and which is factual and also which is correct, irrespective of the fact whether that information may differ from the reported information in GSTR 1 or 3B or Tally or any other source from where that information is available. So always look for what is the correct information when you are getting multiple figures relating to the same information. Now, and the last point is, you can use effective use of offline utilities or any other available software for filing the online returns, because in case of high volume data, it is really difficult for you to do manual workings and attempt to file the GST returns. So therefore, try to use the utilities. At least if you attempt to use the utilities for this year, you may not be successful. But what happens, at least for coming years, you will be used to using this information and you may use it for filing the GST returns. Okay. So moving to the next slide, I have given certain instances or the possibilities of missing transactions, mismatch in transactions, transactions overlapping between different periods. What are the various possibilities? I'm not going to discuss or take you through these possibilities, but again, this PPT will be shared with you and you can take a look at it as and when you find time. Now we will go into the each clause by clause analysis of GSTR 9. So we'll start with part 2. Part 1 is of course basic. This is auto-populated in the GSTR 9 when you open the GSTR 9, and part 2 is the one where you will have to start working on. So this deals with details of outward and inward supplies on which tax is payable. Now there is a part 3 as well. Part 3 deals with outward supplies on which tax is not payable. So outward supplies are divided into two components. One component is those outward supplies on which tax is payable, and those outward supplies on which tax is not payable. So in part 2, there is an exception. In addition to outward supplies, this also includes inward supplies on which tax is payable on reverse charge basis. So therefore, part 2 deals with all those transactions on which a registered person is required to pay the tax. So before we start working on, before we start filling up the information on part 2, there are certain points that we have to keep in mind so that we can avoid several errors. Now, first and foremost, the starting point is to reconfirm the accuracy of the figures reflected in GSTR 9. So what happens the moment you open GSTR 9, you will see auto-populated figures. So these figures, 90% figures come from GSTR 1, and data pertaining to RCM will come from GSTR 3B. So the auto-populated figures that you see in GSTR 9 will either come from R1 or 3B. The point is, you have to try to find out whether the auto-populated figures in GSTR 9 is accurate or not. So first and foremost thing is to understand from where this data is coming and whether this data is accurate or not, and whether what kind of source drives this data, from where this data is coming, etc. and etc. If you had performed your GSTR 1 versus tally reconciliation, GSTR 1 versus 3B reconciliation, then the process here would be very, very easy, because directly you can link up with your audited accounts via tally and to GSTR 1. I am using the name tally because it could be any software system that you may use, not necessarily tally, but I'm just using a indicative name just to state that I'm referring to an accounting application. So the second point is, if a registered person is having presence in more than one state, obviously, as you know, in GST, if you are located in more than one state, if you are doing business in more than one state, you have to obtain separate registration for each such state. Having separate registration in each such state, you need to have individual accounts for each such state. If it is not a company, then what happens? Or if it is a company, if it is not a listed company, then there is no practice of preparing standalone accounts. So only one set of accounts are prepared, consolidated accounts are prepared. But for filing GSTR 9 for each individual registration, you need to have a separate accounts from where the data can be extracted. So for reporting outward supplies, so separate individual accounts for each registration is required. And the third thing is differences in turnover arising due to accounting treatment. So what happens when you see GSTR 9 auto-populated figures relating to turnover, and when you compare with audited accounts, you may see that there is some difference. So the moment you see the difference, you will try to understand what are the reasons for this difference, from where this difference is coming. So for one reason for such difference is difference due to accounting treatment. What happens when you finalize the accounts? For accounting purposes, you will apply a different treatment to your sales. I will give you one example. Let us say the discount on sales. Some of the people, they have a practice of reporting gross sales in their accounts, and the discount is reported as expenditure on the P&L side, as an expenditure. So this is the practice that they follow. People who are not following the accounting standard, they also follow this practice. Now, whereas when you come back to GST, the discounts are always netted off with your GST, is it not? So you will report net turnover in GST. So because of this accounting treatment, what happens? The turnover reported in GST returns will not match with turnover reported in accounting system or audited accounts. So therefore, it is important that you understand why this difference is coming. And one reason could be because of the accounting treatment. So another important thing is periodical factors. As I have mentioned in my opening remarks, when you finalize your accounts for income tax purposes, you will make several adjustments. And one adjustment could be addition of missed out turnover. Having filed March GST return, you realize that there is some transaction which has not been reported in GST return. You will capture for finalizing your income tax returns, is it not? So you will report the turnover in your income tax returns. So when you report this turnover in income tax returns, to this extent, there is a difference between the turnover reported in your audited accounts vis-a-vis your GST returns. So this is called as periodical factors. So when you encounter these differences, there is a possibility the difference is because of the periodical factors, and you should understand before you attempt to file the GST return. Excuse me. So differences arising out of intercompany sales. As we all know, in GST returns, what we do when we supply from one branch to another branch, which is located in another state. So we report this as a third-party sale. We report this as a commercial sales in GST. But when we prepare our audited accounts, when we prepare our regular accounts, we don't report this as third-party sales because it is a branch transfer. We are not selling to a third party. So when you see the standalone accounts or when you see the consolidated accounts, it is possible that there is a difference on account of this intercompany sales. And when you see a standalone accounts, there may not be a difference. So you should keep in mind that there could be a differences arising out of the intercompany sales that is reported in GST, but that is not captured in your audited accounts. And as I've already mentioned, adjustments carried out in the next financial year has to be kept in mind because those adjustments might not have been captured while filing GST returns. And second, the last important point is treatment of errors at the annual return stage. For example, B2B was reported as B2C in monthly returns, and the same was discovered at the stage of filing of return. I come across people asking so many questions while filing GSTR1 by mistake. Instead of reporting a transaction of sale as B2B, it was reported as B2C while filing GSTR1. So all those cases, such type of transactions, how you have to treat while filing GSTR9. Can you make corrections in GSTR9? If you make corrections in GSTR9, what will be the impact? Is the question. So how will you treat when filing GSTR9 if there are any errors that have been committed at GSTR1 level? Can you rectify them at GSTR9? And if you rectify, then what will be the impact? What benefit you will get? Or if there is any benefit you will get or you won't get any benefit is the question that I will address in my subsequent slides. And then the reasons, the differences arising out of treatment of reverse charge in books compared to the treatment offered in GST. Because quite sometimes in books, you may not record your reverse charge entries properly, you may not capture it, and there are reverse charge entries in GST returns properly captured, and there could be a difference arising out of that reverse charge differences. And bifurcation of turnover into gross or debit notes and credit notes. Here, the most important thing is, see what happens when you extract your sales register from your accounting application, you will see a gross sales coming up into that sales register. There could be a gross sales and there are debit notes and credit notes into that sales ledgers. But if they have not passed your sales entries properly in the right fashion, and let's say if someone has passed sales entries by passing a JV, then what happens? There is a possibility that the turnover is not captured into this particular fashion on a gross basis. So that will pose a significant challenge while filing GSTR9 because you need gross data of sales, gross data of debit notes and credit notes, and also the gross figures of amendments, because that has to be reported grossly from this particular from this financial year because the relief has been withdrawn. And another thing is interpreting as to what is non-GST supply and exempt or nil rated supply. Friends, non-GST supply from this financial year has to be reported separately. Exempt or nil rated supply can be combined and reported in exempt or nil rated supply. So there was some relief applicable in this area up to financial year 2020-21, but for financial year 2021-22, this relief has been withdrawn. So we will discuss more about this when we go to that section. And differences arising out of non-reporting of certain exempt turnovers. Let's say interest income, a good example. When you file your March GST return, you may not know what is the interest income of the entity. So you will file GST returns without interest income, without reporting interest income. But when you finalize your income tax returns, you will come to know the interest figure. So therefore, what happens in audited accounts, the interest is reported, and in GST returns, interest is not reported. So in all those cases, how you have to treat in the GST 9 annual returns is the question. And another most important thing for this financial year is reconciliation of HSN-wise summary of outward supplies. So this is required because the relief has been withdrawn from the current financial year. And last important point is reconciliation of tax payable as per taxable turnover vis-a-vis declaration of tax paid in GST 9. Here in Telangana, what has happened? There were auto show cause notices that were issued by GST department. They exactly raised issue on this particular point. What they said, in table where you report your turnover, the tax payable is different, whereas the tax payable as per tax paid details is separate table in GST and 9. The figure is different, so there is no reconciliation. So there is some additional liability because of that, the difference in figures. So the show cause notice was issued asking the reasons for those difference. I will explain you more about this when we go to this particular section. So all these points are very, very extremely important before you attempt to even file GST 9 return. I would really urge you, before you attempt to file the return, you think about it, extract this information, keep this information with you ready before you attempt to file. Filing is not a big job, but extracting this information, understanding this information, reconciling this information is a very, very big job. So now we'll move on to the clause 4A. 4A is the starting row where we will see the figures auto-populated from GST 1. Clause 4A deals with supplies made to unregistered persons. So the data comes from table 5, 7, and table 9 and table 10 of GST 1. So since we need not worry the figures, because these are all auto-populated from GST 1, the figures will come here. Now the only worry is if your figures in GST 1 are not correct. If the figures in GST 1 are not correct, then the problem arises. Because automatically the figures which are imported from GST 1 into GST 9 will not be correct. So that poses a big question here. So B2C is directly auto-populated from these tables. You need not worry about this. As you can see, I've just brought in GST 1 extracts. You are all experienced. This is not the first year we are filing GST 9. This is sixth year or so you are filing GST 9. So you all know from where the data comes. The data comes from this table 5. Data comes from table 7. B2C others. And also the amendments. If you notice, I would invite your attention at this stage. If you notice, you see this GST 1. When we talk about B2C data, you see GST 1. It is covered in how many tables here? They call it tiles. 5, number 1. And then you have number 2, credit notes and debit notes unregistered. Okay. Then you have B2C large, amended B2C large 3. And you have B2C others 4. Is it not? So then there is amended B2C others 5. In GST 1, there are 5 different sources where B2C data is stored. 5 different sources. But when it comes to GST 9, there is a single row where the B2C data is required to be reported. Because for this year also, For this year also, the relief of reporting net data, or I think there's no table at all for B2C reporting in GSTR 9. There is only one single row. The row, this is like earlier VAT days where there was only one box where you have to report the sales data. So from all these 5 sources of information, from five different tables in GSTR 1, the B2C data has to be extracted and it has to be reported in single row. This is exactly the job we do in GSTR 9 filing. Either we would be breaking down the data or we would be merging the data. So in case of B2C, what we are doing is we are merging the data which has been broken down while filing GSTR 1. So that is the difference here. So it is auto-populated, but again, if GSTR 1 data is incorrect, if you don't rely on the data, then the only source that you have is to look at your books of accounts which tally with your audited financial statements. Okay. So as I mentioned in this slide, there is no need to split between more than or less than 2.5 lakhs, no need to split between interstate, intra-state supply. So all this data is reported net in GSTR 9. It's a very big relief as far as B2C reporting is concerned. Now coming to B2B, in 4B, B2B information is reported. Again, this data comes from table 4A and 4C of GSTR 1. 4A deals with pure B2B transactions. 4B deals with transactions which are covered under reverse charge, where your recipient has to pay under reverse charge. So 4B doesn't figure in this row. So table 4C covers those transactions which are supplied through e-commerce operators. So table 4A and 4C, whatever you have reported in GSTR 1, that data will be populated in table 4B of GSTR 9. All right. Then comes zero rate supply on payment of tax. There are very few registered taxpayers who export with payment of tax, because a lot more people, they opt to offset their ITC, claim their ITC, pay the tax and claim the refund of tax that they have paid on exports. Here there is one problem in the sense the reporting issue. As you can see on the screen, table 6A of GSTR 1 captures details pertaining to exports with payment of tax and without payment of tax. So what you are exactly doing is you are unpacking everything which has been packed at GSTR 1 level. Because in GSTR 1, there is only one table, one row, one box where all varieties of exports are reported, all in the sense with payment of tax and without payment of tax. However, when it comes to GSTR 9, we have to report exports with payment of tax separately and exports without payment of tax separately. Then how this is a challenge? This is a challenge because while reporting GSTR 1, we have reported with payment, without payment in single box. So therefore, we have to segregate the export into 2 components. At GSTR 9 level, we have to unpack it, split it, and report it separately at GSTR 9 level. So that is the challenge here. To this extent, you have to do some manual work while filing this GSTR 9 return. And supplies to special economic zones on payment of tax. This is same as regular exports. And deemed exports also you have to capture, where you have to pay some nominal amount of tax under the relief notification, under the exemption notification. And the relevant tables are there. Table 6C of GSTR 1 captures details pertaining to the deemed exports. And another most important thing is advances on which tax has been paid, but invoice has not been issued. It is not covered under A to E above. See what happens at GSTR 1 level, there is a separate table for capturing all the advances which a registered person receives and on which tax he has to pay. Is it not? And whenever those advances are adjusted and sales invoice is issued or tax invoice is issued, automatically there is another table where those advances are shown and the advances figures will reduce to that extent. So it gets adjusted automatically. So at the end of the year, you have to report only those advances which are outstanding, which remain unadjusted, it has to be reported in table 4F of GSTR 9. Now here the problem is, you see GSTR 1 may show some advance figure, whereas when you go to balance sheet, there could be some other advance. Now there is a possibility, because you will receive so many trade advances, and on those advances might not have been captured in GSTR 1. So you should really evaluate. You should evaluate whether there is any advance outstanding, trade advance, particularly trade advance, any other advances outstanding which is not captured in GSTR 1 but appearing in balance sheet. So if there are any such advances, that have to be reported in GSTR 9, and if the tax has not been paid, the tax has to be paid at this stage. So table 11A of GSTR 1 captures details pertaining to advance amount received in the tax period for which the invoice has not been issued. So I will not go in depth on these points because the PPT will be shared. You can just go through this. And another important thing is inward supplies on which tax is to be paid on reverse charge basis. So this data is populated from GSTR 3B, as you can see on the screen. Table 3.1D deals with inward supplies on which the taxpayer is liable to be paid, liable to pay tax on reverse charge basis. Now, the thing is, these inward supplies are basically both from registered and unregistered persons. So when you report inward supplies and a reverse charge in 3B, they are the combination of supplies from registered and unregistered persons. But when it comes to GSTR 9, there are two components here. Inward supplies on which tax is to be paid on reverse charge from registered persons and from unregistered persons. So this will appear in ITC section. I will dwell more on that when I talk about ITC section. But when it comes to payment of taxes, there is only one row which is similar to the row which is there in GSTR 3B. So these figures automatically comes from 3B. Now, the one important thing for this financial year, see what is happening when 3B became effective. There are so many inward supplies which the finance department itself is not aware, especially on inward supplies. They are coming and sitting in 2B. Finance function, the finance department is not aware that there is some transport bill that has come to the office, that has come to the company, on which the tax is liable to be paid on reverse charge. But all those reverse charge entries are appearing in 2B data, which can be downloaded from the portal. So one thing is to be remembered here. So you have to go through the 2B, and if there are any supplies on which tax has to be paid on reverse charge basis, that has to be identified. If they were not already reported in 3B, you have to report here in GSTR 9 and tax has to be paid. You have to keep in mind, because what happens if because there is a tendency of ignoring these RCM supplies, because you may think, or the registered person may think, that those RCM supplies are not applicable to them, but it is applicable from the perspective of discharging the liability. So even though they may not be aware about RCM supplies, but it is very important, because once the RCM comes into 2B, you have to discharge the tax as a liability. So here the relief has been withdrawn up to financial year 2020-21. There was an option to not report credit notes separately. Credit notes and debit notes, and also the amendments. Credit notes, debit notes, and amendments were optional up to financial year 2020-21. But from financial year 2021-22, the relief has been withdrawn. So now the credit notes have to be reported, debit notes have to be reported, and also your what do you call sales invoices. They should also be they have to be reported in GSTR 9. And this is particularly challenging given the fact that debit notes and credit notes are now de-linked with the invoices. Is it not? They are de-linked with the invoices. I will give you one example. What happens? Let's say you are allowed to issue now debit notes without any time restriction. Is it not? Now you issued debit notes in the current financial year for an invoice which pertains to, let's say, 2018-19. Is it not? There is a possibility. So Therefore, if those debit notes are reported here, and if you are not aware that those debit notes does not belong to this current financial year, that may not tally with your audited accounts. So there is a possibility that that may not tally with your audited accounts. So therefore, it is very important in the context of the fact that debit notes and credit notes are delinked. You should know which credit note belongs to which year and which debit note belongs to which year, so that GST 9 can be filed properly, or at least you will know that these credit notes and debit notes pertains to this financial year. So all this data is also captured from your debit note from your GSTR1. While filing GSTR1, if debit notes and credit notes were properly reported, then automatically this figure will be captured. Now I will tell you the main problem arises where. The main problem arises when you are suspicious about the figures which are populating in GSTR9 from GSTR1. If you think that the data which is reported in GSTR1 is not correct, then you have to go to books of accounts. And if your books of accounts are not maintained properly, if debit notes and credit notes are not captured properly, then it will be a big challenge for you to understand which debit notes is correct, which credit notes is correct, and which to be reported and which should not be reported. So therefore, it is very, very important that books of accounts, right from the beginning stage, are structured properly, information is captured properly, so that the data is reported in a right fashion at the GSTR 9 level. So moving on to the second section in part 2, details of outward and inward supplies on which tax is not payable. So here, when we talk about zero rated supply, we are talking about those zero rated supplies which are without payment of tax. You can see here on the screen, table 6A of GSTR1 captures details pertaining to exports with and without payment of tax. As I've mentioned here, this is the same table which is used for extracting the details pertaining to with payment of tax. So unless and until there is a clarity in the books of accounts, there is a segregation in the books of accounts as to what is the export with payment of tax, what is the export without payment of tax, it is very difficult for you to extract. It is difficult but not impossible. Why I'm saying why it is difficult? Because more manual work will make you lose your valuable manpower time, unpaid man hours time. So you will end up spending so much unpaid man hours while filing GSTR 9. So it is always advisable to maximize your efficiency by extracting the ready information so that you can save a valuable man hours while filing GSTR 9. So supply to special economic zones without payment of tax, this is captured from 6B, and supplies on which tax is to be paid by recipient on reverse charge. So for example, if you are a security services company, if you are supplying these services, the recipient has to pay under reverse charge. So the data will be reported by security services company in 4B. So wherever the data is reported in 4B, that has to be reported in GSTR1. Okay. So the third and the last component is exempted, nil-rated, and non-GST supply. As I've mentioned in my opening remark, the relief has been withdrawn from this financial year. You see, there are 3 components here: exempted, nil-rated, and non-GST supply. The relief available up to 2020-21 was, you can report all these 3 components into one row, any row, exempted, nil-rated, or non-GST, or exempted row. They specified last year as exempted row, like you are seeing on the screen. Nil-rated, non-GST could be combined and reported in the exempted row. But from this financial year, from 2021-22, so they have withdrawn this relief. Partial relief they have given now. What they say, you report this non-GST supply separately, and you merge exempted and nil-rated supply and report in exempted supply. So this is the relief that has been given. Now the question is, just a practical discussion before you. The question is, what is exempted supply? What is nil-rated supply? And what is non-GST supply? What is the difference between all these 3 components? Number 1. Number 2, having noticed that the data is not reported properly at GSTR1 level about exempted supplies, is it that important that you have to report at GSTR9 level? Or do you have to report at GSTR9 level? I will just explain you what is the difference between exempted, nil-rated, and non-GST supply. To be very frank, the definition given in the GST law and exempted supply is very vast. It includes all exempted supplies, including nil rated and non-GST supplies. So technically speaking, from the legal perspective, this exempted supply, which is shown on the first row, covers everything. It covers nil rated and non-GST supply as per the definitions given in the GST law. But when we come back to these returns, there are 3 different rows, and they're asking you to report this information separately. So I will tell you in practice what do you mean by exempted, what do you mean by nil rated, what do you mean by non-GST supply. So in practice, when I say in practice, it may not be it may not have a legal basis, but there is a common understanding that exempted is related to services, nil rated are related to goods, and non-GST supplies are related to either those supplies which are not covered under Section 7, which are not supplies, or those which are covered under Schedule 3. So that is the difference between these 3 components. The client may not understand this properly. He may not understand this because it is very difficult. There's so much confusion here, and the lines are very blurred. And while doing the accounting, it is possible that exempted could be recorded as nil, or nil could be recorded as exempted, or exempted and nil would have been reported as non-GST supply while filing GSTR1 or while maintaining the books of accounts. There is a possibility. I am not denying that. There is, of course, a possibility, because from the registered person perspective, all these components are those components where the GST is not applicable. For them, it is one and the same. But again, for GSTR9 purposes, since this has to be shown separately, it is important for you to understand the difference and sort out the information in that particular categories and report that in GSTR9. So just one example before you, the example of interest which I have given you, whether it is exempted or whether it is non-GST supply, whether it is exempted or non-GST supply, that is the question. Because I understand in most of the cases, interest might not have been captured in GST returns which you file at the end of the year, is it not? Because the interest figure will arrive only at a later stage when you look at the bank statement, when the bank posts the entry, etc., etc. So there is a delay in accounting of interest entry, and by that time GST returns are filed and the figure is not known. So therefore, the interest might have skipped. It might not have been captured. Now, what is interest? Whether interest is exempt, whether it is nil rated or non-GST supply. So interest is an exempted supply in practical terms. Of course, from legal perspective, it is exempted only because exempted covers all kinds of exemptions. But for reporting purposes, interest has to be reported in exempted supply. So non-GST supplies are those supplies, for example, free samples. In case of free samples, there is no consideration, because one of the essential condition of supply is there has to be a consideration. If there is no consideration, it is not a supply. When it is not a supply, then that is outside the purview of GST law, and hence it is a non-GST supply. Another example, sale of land. Land is excluded from the purview of GST law under Schedule 3. Therefore, the sale of land is a non-GST supply. Therefore, it has to be reported under non-GST supply. So this way, you can understand what is exempted, what is nil rated, and non-GST supply, and accordingly you can report. So another important question, or the query is, does this information is so important? Does it really matter? Do we have to really report it? How it is important when there is no tax liability? These are all exempted supplies. I will answer to this. The most important thing here is we have to report this so that the figure which we are reporting here matches with our 9C figure. Because at the end of the day, when we file our 9C, we have to do reconciliation of the sales reported in audited accounts with the sales reported in GST returns. Is it not? We have to do the reconciliation. So therefore, if you report all these figures properly, there is a possibility that there won't be any reconciliation differences, because there is an apprehension that if there are any reconciliation differences, there is a possibility of show cause notices being issued to the registered person seeking explanation of these differences. So if you really wanted to avoid all sorts of differences, you better report in GSTR9 and close the chapter. So the question is, can we report this at GSTR 9? I'm just showing the screenshot. It's a live screenshot. You see, the figure which you are seeing on the screen is auto-populated from GSTR 1. It is coming from non-GST supply. If you see this figure in the second slide, now there is one red box that is appearing, red border, and the figure has been updated. So what has happened here? The figure has been overridden and the actual figure which is reported in the audited accounts is being overwritten here. So you can do this exercise across every table in GSTR 9 except on ITC, which is populating from GSTR 3B. That you cannot override. And taxes that you have already paid, that also you cannot override. So rest, everything can be overridden. So, and you have to overwrite. Even the sales, if you have not reported in GSTR 1, but you have discovered at a later date, including at the date of filing GSTR 9, those sales have to be reported in GSTR 9 by overwriting the figures which are auto-populated in GSTR 9. Okay. So the relief is continued here because there is a stipulation of reporting credit notes, debit notes, amendments, etc. with respect to outward supplies which are made during the financial year on which tax is not payable. But again, for this financial year also, the relief has been continued. There is no need to report separately the credit notes and debit notes in respect of outward supplies on which the tax is not applicable. You can combine this in main figure and report there itself. There is no need. So after reporting all those figures, after reporting the correct figures from the sources which you have identified, you will arrive at the final turnover. This is very, very important. 5N. This is the figure that is compared with the audited accounts in 9C. So when you are trying to file, when you try to file 9C, it will ask you to compare with turnover reported in GSTR 9, and it comes from this row 5N. So even if there's some fraction difference comes up here, then it will not allow you to file GSTR 9C. So therefore, make sure the data which is coming in this row is the actual data which is matching with your audited accounts. So therefore, it is important that you don't file GSTR 9 unless and until you finalize your GSTR 9C. So you can finalize 9C and come back and file GSTR 9. Why I am saying this? If there are any adjustments after after preparing 9C, if you realize that there are some adjustments that needs to be done, you will have pretty much opportunity at GSTR 9 level to make those adjustments and sync these figures with 9C and comfortably file GSTR 9C. We'll move on to part 3. This deals with ITC for the financial year. So when we talk about ITC, the purpose of GSTR 9 is there are two tiers of verification here. One is authenticating the data which is reported and bifurcating the data into various categories such as capital goods, inputs or input services. These two tasks are very challenging, very, very challenging. Authenticating the ITC reported is very challenging because what happens, you look at this table 6A, this is the total amount of input tax credit that is auto-populated from GSTR 3B. It is coming directly from table 4A of 3B. You see here on the screen, this is the table 4, this is A. So it sums up all these rows and columns and tables up to 5. 1, 2, 3, 4, 5. If it sums up, and this figure is captured and auto-populated here in 6A. So when it is captured in 6A, the question arises whether this data is correct or not. So where will you look? When you open your audited accounts, obviously you will not see what is the ITC availed during the financial year. Therefore, what will you do? Obviously, you go back to your books of accounts, is it not? You have to go back to the books of accounts, and only those books of accounts which are matching with the audited financial statements. Having gone to books of accounts, you will see the ITC ledgers. So in my experience, I have seen there are people who are still maintaining only single ITC ledger. In the single ITC ledger, they are maintaining central tax, state tax, and integrated tax. all the taxes are merged in one ledger itself. So if that being the case, how do you really cross-check these figures? Because here you have to report separately central tax, integrated tax, and state tax. So if your ledgers are not structured in particular fashion, it is very difficult for you to really compare or arrive at the authenticity of the figures which are getting auto-populated in GST 9 vis-a-vis your books of accounts or audited financial statements. And ineligible ITC in 3B, in most of the cases, what people do, they debit the expenditure account along with the GST. They don't maintain separate account of ineligible ITC in the books of accounts. If the separate account is not maintained, the problem is you will not arrive at what is the exact amount of ineligible ITC that is recorded in the books of accounts. And third thing is treatment of reversals in ITC in GST or 3B versus books of accounts. In most of the cases, what happens when you do the accounting in books of accounts, the reversals are not accounted properly. But when it comes to 3B, you have to report reversals separately. As you can see here, you see in 4A, 4B, there is a gross column. 4A deals with the gross ITC and 4B deals with reversals. So what I'm trying to say, when you maintain your books of accounts, these A and B are clubbed and reported as a one figure in books of accounts. But when it comes to 3B, it has to be reported separately. So it is a very big challenge for you to identify what kind of reversals are applicable and what kind of data has been reported in 3B vis-a-vis your books of accounts. And another big challenge is the data on what is capital goods, inputs or input services. So when you maintain your ledgers, like for example, ITC, if a ITC ledger has a separate ledger on capital goods, ITC on capital goods, you can extract the data readily from that ledger. But since only a single ledger is maintained, let's say IGST or CGST ITC, SGST ITC, and IGST ITC. If these single ledgers are maintained, what registered persons will do, all kinds of ITC is captured there, including the ITC on capital goods. So therefore, there is some additional work again involved here to extract the data pertaining to GST applicable on capital goods. And another important factor is 2A or 2B reconciliations. There is a big challenge, especially during this particular financial year, that I will cover when I go to 2A, 2B reconciliation section. So ITC differences arising out of periodical factors such as ITC of last year availed in the current year and ITC of current year availed in the next year. For example, in 3B, there is a possibility because there is only one single row where all types of ITCs have to be taken. For example, this 4A which you are saying, there is all other ITC. Table 4A5, if you look at the screen, this row captures all ITC. Now, let's say in financial year 2021-22, you have captured some amount of ITC belonging to 2020-21, last year. So how will you reconcile those the data belonging to the last year? How will you handle the data belonging to last year is the question. And non-identification of ineligible ITC in the books of accounts and challenges in computing the eligible ITC as per Rule 42. Okay. So these are some of the points which you have to keep in mind before attempting to ITC. So if there are these challenges, make sure the data is extracted properly, kept ready before filling up this detail pertaining to ITC. So it starts with table row 6A. In row 6A is auto-populated. It comes from table 4A, as I've mentioned in my earlier. So it adds up all these rows and columns, and then the data is populated here. And this data is freezed. You cannot change this data. It comes directly from 3B. You cannot modify it. Okay. So 6B, whatever data is reported here, in all subsequent rows, all we have to do is we have to classify the data which is auto-populated in 6A into various components. 6B, there are three categories: inputs, capital goods, and input services. Is it not? So therefore, there was some relief up to financial year 1920. From financial year 2020-21, the relief has been withdrawn, partially withdrawn, and the partial relief withdrawal is continued even for current financial year 2021-22. For this financial year also, capital goods have to be, ITC on capital goods have to be reported separately. Inputs and input services can be merged and reported in a single line. So I would say this relief is continued because government is not asking you to split the ITC into 3 components. Rather, it is asking you to split the ITC into 2 components. One is capital goods, second is other than capital goods. So other than capital goods can be reported either in inputs or input services. So for the beginners, let me tell you what is the difference between inputs and input services. Inputs is the expression used for goods, and input services is the expression used for services. So technically speaking, capital goods are also goods, inputs are also inputs, but capital goods are those goods which are capitalized in the books of accounts. Okay, that is the difference. And then you see 6C, inward supplies received from unregistered persons liable to reverse charge, and 6D, inward supplies received from registered persons liable to reverse charge, on which tax is paid and ITC is availed. Import of goods is separate, import of services is separate. Okay, these 4 points I will discuss now. You see, inward supplies received from unregistered person. So what is happening? I have seen the data which is auto-populated in GST 9 relating to RCM is auto-populating in section row 6C. It is assuming since this is the first row, the data is getting auto-populated into this row, inward supplies received from unregistered persons. As we all know, this notification is withdrawn. There is no there is no blanket notification on payment of inward supply, payment of tax on RCM on inward supplies received from unregistered persons, except in few cases. For example, in real estate, if the promoter has not paid the tax on cement, steel, etc., or whichever is notified in tariff notification 11/2017, then he has to pay tax on reverse charge, even though the suppliers are registered or unregistered. He has to pay under reverse charge. If the supplier is unregistered, obviously registered person will issue tax invoice. So this is the intention is to refer to unregistered persons. So all those cases have to be reported here. Now, what will you do with the auto-populated data that is auto-populated in 6C? So what you have to do, you have to remove the data from 6C and you have to insert the data in 6D, because in most of the cases, the inward supplies covered under RCM are from registered persons. For example, you have transportation services, you have security services, you have sponsorship, etc. and etc. So all those cases you have to report under 6D. Even if the data is auto-populated in 6C, remove the data and bring it back to 6D. And it has to be bifurcated into inputs, input services, and capital goods. So import of goods have to be reported here, and import of services have to be reported here. So this data is also auto-populated from GSTR 3B. And in case of import of services, you should exercise caution, because import of goods, the data comes from ICAI portal, because you cannot claim the refund unless and until the data in ICAI portal matches with the data which is reported in GSTR 1. So this data is automatically reconciled with the data which is maintained in ICAI. But as far as the services are concerned, there is no involvement of ICAI. So it is on self-assessment basis. So the registered person has to pay the tax on reverse charge basis on import of services if during filing of monthly returns on any service, if the tax is not paid and if that service is discovered at GST 9 filing stage, so the tax on RCM has to be paid at this stage. And then input tax credit received from ISD and amount of ITC reclaimed under the provisions of the Act. What we are doing here, my friends, we are classifying the data which is auto-populated in 6A. 6A data is coming directly from 3B. That data we are classifying this into all these categories. So unless and until your client is maintaining ledgers properly, unless and until the data is available in these categories, in this fashion, it is very difficult for you to understand which ITC is reclaimed, which ITC is not reclaimed, etc. and etc. So reclaimed ITC is 180 days ITC, is it not? Because If you have reversed the ITC because you have not paid to your supplier, you can take back, you can reclaim that ITC even after 10 years or 15 years. There is no time bar on reclamation of ITC for the reason of non-payment to supplier within 180 days. So transition credit, of course, comes here, and any other ITC availed but not specified above. I have mentioned in my comments here, like ITC 01 or ITC 02 related ITCs can be reported in 6am. It's a residuary row. Any other ITC which has been availed can be reported here. And then comes reversals. Reversals are under rule 37, 39. 37 is due to non-payment of consideration, and ISD reversals, common credits relating to capital goods, and reversals due to section 17(5), reversals due to tran 1 credit, tran 2 credit, and other reversals you have to specify any other reversal. Okay, so any other reversal could be credit notes, just as an example, because credit notes is not covered in the above rows. So other reversals could be because of the credit notes. Okay, so there is not much update on that, but there are 2 points which I will explain, which you have to keep in mind. So point number one, and this is more from practical perspective. I will take you to the screenshot of GSTR 3B. Here, this screenshot. So you pay the attention to this screenshot. You see there is table 4A, there is table 4B, and followed by net ITC and followed by ineligible ITC. There are two most important things here. While filing GSTR 9, you have to report gross ITC followed by the ITC reversed and then net ITC. Is it not? We have just seen. So this data is auto-populated from GSTR 3B. Is it not? Now, what you have done at 3B stage is important now. If you have reported gross ITC in table 4A and gross ITC in reversals in table 4B, then the figures will come exactly in GSTR 9. But if you have not reported reversals, if you have reported on only net ITC in 4A, while filing 4A, what you have done, gross ITC minus reversals, you have reported as one column. You can do that. When filing 3B, no one will ask you. It won't prevent. You have to take your own precautions while filing 3B. So there are divergent practices being followed by taxpayers. It is possible that only net ITC is reported here. So in that case, you have to pay attention to this particular row. You should know that the figure which is populating in 6A is a net ITC or is it a gross ITC? Then only you can report the data in reversals. For example, if it is a net ITC, and if you go and report something in reversals, then what will happen? It will be a big disaster. Your ITC will again further reduce. So therefore, it is very important that this row has to be understood before you attempt to file the return. This is number one. So number two, on ineligible ITC. As you can see, there are two ways of reporting ineligible ITC. One is you report in gross and you reverse here in others, and you have to report in ineligible ITC. So in all the three tables, table A, table B, and table D, ineligible ITC has to be reported. Second option is you don't report in 4A, you don't report in 4B, you report only in ineligible ITC. So this is also followed. That is also followed. This is also followed. I'm not talking about the new format. This is the old format. New format also I bought. I will show you. Okay. So now if you look at this table here, what it says, as far as ineligible ITC is concerned, they have given the option. So whichever methodology you followed while filing GSTR 3B, the same methodology you follow. If you have reported gross and you have reported reversal, then you report here. If you have not reported in gross nor in reversal, then don't report here. So that is what it says. I will tell you what is the problem. Now, if this figure, let's say here ineligible ITC is not reported. Let's say in 6A, here in 6A, ineligible ITC is not there. Okay. Now you come back to this reversals section. Here, if you insert 17.5, then your numerator, the table does not have the ineligible ITC. You will end up unnecessarily reducing your net ITC. So therefore, you should be very, very clear on what is included in ITC that is populating from 3B and what is not included. And here books of accounts play a very, very important role in understanding these figures. Okay, so this is the new table of GSTR 3B. Just for clarification purposes, I have placed it here. So this format is not applicable for financial year 2021-22. For filing GSTR 9, this old format is only applicable and not the new one. So in new one, they have made some changes, like 17.5 has been completely eliminated and it has been shifted to AB. Some people call it permanent, some people don't call it permanent, etc. and etc. There is not much guidance available. And then then there's the residuary clause on others. So I'm not saying that the first row is permanent reversals and the second row is temporary reversals, etc. and etc. So because the terminology is there as per rule so and section 17.5, or there could be any other reversals. So permanent reversals that may also come in others. Anything may happen. So, but again, that comes into the next year. But for financial year 2021-22, that is not our concern now. Our concern is on our old format that we have followed. So now comes another important aspect of GSTR 9. ITC on as per GSTR 2A. This comes up here. Now the problem here with ITC for this financial year is up to December 2021, 2A was applicable. From January 2022, 2B came into force. So what happens? What is the issue? When you try to reconcile, when you take the dump of 2A data, up to December 2021. So whatever invoices reported by suppliers up to September or October 2022 should ideally appear, and the recipient should be able to take the ITC with respect to those invoices. I will repeat once again. Invoices reported by suppliers for the periods up to December 2021. In the financial year 21-22, invoices belonging to period for 9 months up to December 2021. The ITC on those invoices can be taken even if the suppliers have delayed reporting of those invoices by 6 or 7 months up to October, or 8 months up to October. You can take the invoices. But for January, February, and March, since 3B has come into effect, if the suppliers fail to report those invoices by March 2022, if they have failed, then you cannot avail the ITC. So the practical issue is now when you download 2A, that may cover all the ITCs. That may cover all the ITC for the entire financial year 2000 up to March 2022. And that may also include the invoices which are reported by suppliers up to October 2022, including for the 3 months. So the challenge here is to split the data into 9 months and 3 months. 9 months data reported up to October can be taken. 3 months data reported up to October cannot be taken. Only reported up to March can be taken. So that has to be understood, because that provision became effective middle of the year. Therefore, this problem comes in. But I will tell you what is the solution, what can be done. But let me just explain you this table. Now, this data is auto-populated from GSTR 2A. You can see here, GSTR 2A is coming. There is a gross data, 3 is gross, 5 is debit notes and credit notes. Okay. But let me just tell you, there is some problem happening for this financial year. The ITC data that is coming in GSTR 2A seems to be missing out the debit notes and credit notes. So the only the gross invoices are coming, and it is not capturing the debit notes and credit notes. I have seen it when we filed the returns. We have observed that this first row, it is not capturing table 5 from GSTR 2A, but ideally it should capture. Up to last year it has captured. Okay. So, and then this ITC is as per the tables which are just discussed in part 3. 6B is your gross ITC, 6H is your reversals. So the net ITC is reported here. So this ITC is supposed to be compared with the ITC which is populated from 2A. This is also net, gross minus debit notes, credit notes, net. Taken in books or 3B, gross, net. So ideally, apple to apple comparison is happening here. Net to net comparison is happening here. But there is some technical problem, or what problem, I don't know. The problem is for financial year 2021-22, they have not given an update. For 2020-21, they gave an update saying that they will be updating the 2A up to the date of filing of GSTR 9. But this year that update was not given. But regardless, so somehow there is seems to be some problem with 2A. So now there are two issues. One is when you are relying on 2A, you have to split the data into 9 months and 3 months and carefully examine which ITC you have to take and which ITC you should not take, and then decide. And second issue is on this particular aspect, net, it is showing only gross, whereas this will be net. So there will be a huge difference. And that difference should tie up with your reversals in previous section. And then ITC on inward supplies received during the financial year, but availed in the next financial year up to the specified period. I will just explain you what is this 8C. See here in ITC as per GSTR 2A, as I have told, up to December 2021, or for that matter, for all the 12 months, the invoices issued by suppliers will be captured in 2A, including those invoices which the suppliers have issued after the closure of financial year. Up to October, if a supplier has issued invoices up to October or reported invoices up to October pertaining to last year, the 2A will be updated. That is the main purpose of 2A. It will be updated. Now the problem here is when we reconcile, what happens in our 3B, when we finalize our 3B, we will take only the ITC which is reported, is it not? Ideally, the ITC which is reported by suppliers. Other than that, we won't take. So here, this table, it captures those ITCs which we have taken in next year. As and when the suppliers have reported, we have taken in the next year. So that ITC is captured here. So this is captured for the purpose of meaningful comparison with the data reported in GSTR 2A. Okay. So the notes are there. You can just take a look at it also. And to make it more clear, there is an example also that I have brought in. So this, since this PPT is shared with you, you can take a look at the example also. One point I will just explain you because there is a very little time now. We have to move on to 9C. So here we have ITC available but not availed, ITC available but ineligible. See what happens, there is a difference here, A minus B plus C. A is the ITC which is coming in 2A. B is the ITC which you have availed in 3B and populating in 9. C is the ITC which you have not availed in the current financial year, but you have availed in next financial year. But this C is already appearing in 2A because it is dynamic. It updates with even those suppliers. It goes by the financial year. It does not, it overrides the periodical differences. So in order to compare this, you are doing this. So this difference will come up. So these 2 points, analyze those differences. So it assumes that this difference is, it could be due to ITC available but not availed, ITC available but ineligible. It is possible. For example, those businesses having or taxable supplies and exempted supplies, is it not? You can take an example of hospital. In hospital, pharmacy is taxable, but IP services is exempted. So all the procurements for IP services or lab consumables, etc. and etc., which are directly related to exempt supplies, will also come in 2A, is it not? Consumable gloves, etc. and etc., which you purchase, the ITC will come up. So therefore, all that ineligible ITC in this 2A, for example, this 2A, it is coming. So whatever figure comes here, it may also include the ITC relating to exempt supplies, ITC relating to taxable supplies. So there will be a resulting difference. The 2A 2A figure will be higher than the ITC which has been availed. So it is asking you to report out of the difference, what is the ITC which you have not taken into your 3B and which is ineligible. If you are pretty sure about this figure, you please insert here. If you are not sure, then you don't insert. And then it is also asking you to report ITC available but not availed. Is it not? So you are eligible for that ITC. It is coming in 2A, but you have not availed for your own reasons. You have to mention here. Okay. So then resulting figure would be, in last figure would be total ITC to be lapsed in the current financial year. So it will also show you which ITC is going to lapse. If for example, if this figure is there, ITC available but not availed, this figure will come here in ITC lapse. Okay. So if you are very clear on these figures, then you insert. If you are not clear about these figures, then what will happen? You are admitting that this ITC will lapse. Because why I am saying you, even if you don't fill up these details, the form will be accepted. Is it not? The form will be accepted. But there is one more opportunity for you to report these differences in 9C. I will explain there also. Even if you skip this, you have the opportunity in 9C to explain those transactions. So I have inserted some examples to explain this point. The PPT will be shared. You can go through these examples and you can look into this and try to understand. And the part 4 is also important. In part 4, on the right side, paid through cash, paid through ITC, these are all auto-populated, freezed. You cannot make any change. Tax payable is amendable. You can amend it. Okay. Now, for example, if there is some turnover which has been missed out while filing GST R1 or finalizing the account, or it has been noticed at the time of finalizing the accounts, that can be reported in the outward supplies section, and resulting tax can be inserted here, tax payable. And you can pay the tax through DRC 03. So this tax payable column can be amended and updated with the tax which is payable due to additional supplies. Okay. So then this part 5 deals with the information which is captured in the next financial year. There is an important update here. These rows 10 and 11, these pertains to outward supplies. For example, if the turnover is captured in audited financial statements but not captured in your monthly returns up to March of any given financial year. However, if those are captured in subsequent monthly returns, that can be reported here. So any sales which is added or any sales which is reduced pertaining to 2021-22 but reported in 2022-23 returns have to be captured here. See, the problem is the data, availability of data. So you need to have the ready data available in most of the cases, since the sales ledger is common and there is no split between what is last year sales, what is current year sales. It is possible that this data is not captured properly. And these 12 and 13, it is optional. So for this financial year, the relief has been continued. You need not report this information. I advise you not to report this, just forget about it. Reversal of ITC is way far complicated because it only captures, it's something, it is intending to capture something, but it is not clear what it is intending. And the notes are also not clear on this. And practically also, it is very difficult to really understand this. So other information, there is an important update here, like HSN-wise supply of outward supplies, HSN-wise supply of inward supplies. There are two components here. I will briefly explain you on HSN-wise supply of outward supplies and inward supplies. Now in what has happened, there is an amendment. Now HSN code has come back again after a gap of few years. The update is up to 5 crores. Taxpayers having turnover up to 5 crores, they have to report 4-digit HSN code, and beyond 5 crores, they have to report 6-digit HSN code. So the thing is, this amendment is applicable even for monthly returns now. The current monthly returns which we are filing, even while filing those monthly returns, you have to report this HSN data. And the irony is, this amendment has been made retrospective. Now, this is applicable for financial year 2021-22. I have heard about legal provisions being made retrospective. But now I am seeing even these written forms, the changes in written forms are being made retrospective. Now the problem with me is my client, what he has done when he was filing GSTR 1, since HSN table was optional, either he has not reported or he has reported all incorrect data. And as we file the return today, no one has the data. Neither the client has the data, nor the consultant has the data. So what do we do now? So it's a very, very big challenge, especially in those businesses which have multiple HSN codes. Is it not? Multiple HSN codes with multiple rates. For them, it is a very big challenge. But those businesses having single HSN with single rate, for them, it's a cakewalk. For them, there is no issue. But for all those taxpayers, you have to do a lot of manual work, compile the data and report it. Otherwise, you cannot file GSTR 9. That is number one. Number two, the table is so sensitive, even if there is some 0.1 difference, it is showing JSON error. It is not accepting unless and until you eliminate that error. So there's a huge volume of data, and amongst that volume, it is asking you to reconcile the data at fractional level, at 0.001 level, the two-digit fractional level, and it's a very, very big problem. So there's a lot of work involved when it comes to reporting of HSN data. So there's no other choice but to really work on this. There is the update, but the relief is the HSN-wise supply of inward supplies is the relief has been given. You need not report HSN-wise data of inward supplies. Although in income tax, there were debates on clause 44D under form 3CB that expenditure-wise ITC, etc., has to be reported. But when it comes to GST returns, the relief is continued both in GSTR 9 and 9C. The relief on outward supplies have been withdrawn, but on inward supply, it still continues. So towards the end of the return, if there is any resulting tax liability, of course, you have to pay through DRC 03. Okay. Some tips I have given, you can take a look at whenever the PPT is shared with you. So I'm not going to look into this now. What I will do quickly, I will open GSTR 9C. It won't take much time, but we'll just finish it off and we'll take up the questions.
So there are 13 questions in Q&A.
So we are looking at 9C now. So GSTR 9C reconciliation statement. I will just give you the brief overview of 9C. There's not much, but few points I will just dwell upon 9C. As you can see, there are two key things. Part A, reconciliation statement. Part B, certification. So reconciliation statement deals with reconciliation of turnover, ITC and taxes paid, and it also deals with recommendation on additional liability. So part B deals with certification. Now the CA certification is not required, but the registered person has to self-certify the GSTR 9C certification. So there are broadly two main parts in GSTR 9C. So looking at these parts, part 1, part 2, part 3, part 4, and part 5. Part 1 deals with basic details. Part 2 deals with turnover reconciliation. And this part 2 has further tables, table 5 to table 8. Part 3 has reconciliation of tax paid, 9 to 11. Part 4 has input tax credit reconciliation, 12 to 16. And part 5 is registered person's recommendation. This is covered under table 10. Okay. So I will explain you all these tables. You can just take a look at it in GSTR 9C. Just to again remind you, once you finalize your GSTR 9, immediately start compiling GSTR 9C before filing GSTR 9. And this is the stage you do. So all these tables I have explained here. Table 1 to 4, basic details. Table 5 and 6, gross turnover and reasons for the difference. So you pay attention here. See, this 9C is structured in such a way. you can report the differences. There is no harm. There is only one problem here. There is only one system lock, as I may say, in 9C. Wherever the data has to be reported as per 9, it has to match exactly. Even at fractional level, it has to match. However, if there is a difference between the data as per books of accounts or audited accounts vis-a-vis 9, it will allow you to file the return, but you have to mention the reasons for the difference. And most of the people who file the GST or 9C return, they will try to remove these differences or try to give any reasons. Reason is because there is an apprehension that wherever there is a difference and wherever the reason for such difference is given, there is a possibility that notices would be issued. So therefore, as far as possible, it is best, it is in everyone's interest to eliminate these differences. And the reason why we finalize 9C before filing 9 is to eliminate those differences. So table 7 and 8 deals with reconciliation of taxable turnover and reasons for the difference. So turnover is divided into two components. One is the gross turnover, another is taxable turnover. And rate-wise liability and tax payable and reasons for the difference. This involves some good work. Table 9 and table 10, if you really ask me, table 9 and table 10 may require some work wherever there are multiple rates involved and additional amount payable but not paid. So what is this table 11? This deals with those cases where, for example, in 5 and 6, 7 and 8, 9 and 10. So there are differences. For example, as per audited accounts, there is a turnover of 1 crore, but as per GST 9, the turnover reported is 90 lakhs. So there is an underreporting of 10 lakhs. Okay. So on the 10 lakhs, what is the tax applicable? What is the amount payable, but which has not been paid? That has to be reported in table 11. Okay. But has not been paid. There could be genuine reasons because, for example, in audited accounts, by mistake, 10 lakhs turnover is overstated. If the 10 lakhs turnover is overstated, that is wrong. So whatever 90 lakhs that is reported in GST returns, that is the correct figure. And the resulting difference is because of that overstatement in audited accounts. But yet, table 11 requires you to report that additional amount that is payable on that 10 lakhs, but not paid. It will just ask you. It is quantification. But so long as you mention the reasons, stating that there is an overstatement of sales figure in income tax, then I think it is fine. At the end of the day, there could be an inquiry, but if you are able to convince them, then it should be fine. Because for income tax people, reporting excess turnover is a good news for them, is it not? They are not worried about that. You are paying excess tax for no reason. GST, there is a worry. There is a possibility that there is a turnover of excess turnover of 10 lakhs in IT, but there is an underreporting in GST. There is a possibility. But so long as 90 lakhs is the correct turnover, then there is no worry, so long as you can justify with your supported documents and information. And table 12 and 13, reconciliation of ITC and reasons for the difference. So this is a bit challenging part, but if you have done the work properly at GST or 9, then this would be a cakewalk. Basically, it requires you to extract the total ITC that you have availed in your books of accounts, in your audited accounts, and compare that ITC with the ITC that you have availed in 3B and reported in GST or 9. That has to be reported here. And table 14, reconciliation with expenses in audited financial statements. So the relief has been continued here. If you recall, this is the reconciliation of, or rather I would say reporting of ITC expenditure wise. Transportation, how much? Consultancy fee, how much? Legal expenses, how much? So like this. So on all these P&L debit items, how much ITC you have availed? There is a separate table, but this was relaxed. It was made optional. And for this financial year also, for 2021-22 also, the relief continues. And reasons for difference in ITC, of course, the reasons because as per expenditure, you are showing some X ITC. As per the ITC which is availed, that is a different figure. There is a difference between these two figures and the resulting difference. You have to, reasons for the difference you have to explain. But since table 14 is optional, table 15 will also become optional. and tax payable because of unreconciled ITC. So it is also linked to table 16, and it is also linked to table 11, 12, and 13. I will explain you more about this when you go to table 16. So this is the brief overview about GSTR 9C. So we will go to reconciliation of gross turnover. There's so much good news in 9C. So many reliefs are withdrawn in 9, but so many reliefs are continued in 9C. There's such a really good news in 9C. So this turnover as per audited financial statements, same for multi-GST units under same PAN, the turnover shall be derived from audited financial statements. Okay. So now the thing is, if you have multi-state entity, if you have prepared standalone accounts, the data will be readily extracted from standalone accounts, and that data has to be reported here. At the end of the day, it requires you to report the turnover from audited signed accounts. Because when you file GSTR 9C, you are required to upload the signed balance sheet and P&L. So whatever you are uploading, the data has to be extracted from that uploaded financial statements. So subsequently, B, C, D, E, F, all these components, and even G, H, I, J, K, L, and M and N, up to N, all these components have been relaxed. It has been made optional. You need not really find out what is unbilled revenue, because why we have to find out? This is like a bank reconciliation statement. The turnover which is reported as per audited accounts, you have to compare with turnover which is declared in GSTR 9. I have mentioned here turnover as per table 5N of GSTR 9. So you are reconciling the turnover reported in GSTR 9 versus turnover reported in audited financial statements. So therefore, there could be resulting differences here, is it not? Unbilled revenue, unadjusted, etc., and etc. All these reasons which they have captured in these returns, they have mentioned here, but they have deferred it. They have made it optional. The registered person need not report these reasons, except O. What they are saying, if there is a gap between turnover in annual returns 9 and audited accounts, you please mention here in this section. Like the example which I have given you, in audited accounts, the discounts are not netted off from sales figure. The sales are reported on gross basis, whereas in GST returns, the sales are reported on net basis. So there is a difference resulting on account of such discount. So that discount figure can be reported here. So accordingly, turnover after those adjustments will come here, auto-populated, and then that turnover will be matched with turnover declared in 9. And if there is any difference, this unreconciled turnover will appear here. So therefore, all legitimate reasons should be captured in O. And if there is any other reason beyond your control, like as I've told you, so there is an overstatement in audit accounts that can be reported as unreconciled turnover, and you can mention the reason also in subsequent slide. Like here it is there. Yeah, so these are the reconciliation of reasons for unreconciled difference in annual gross turnover. You can mention the reasons here, and so long as you mention the reasons, and if these reasons are linked with the difference in annual turnover, then the 9C will be allowed to be filed. Otherwise, 9C will not allow you to file. So the thing is, you should take this as an opportunity to report these differences, because what happens in most of the show cause notices that they issue, if they issue a show cause notice under section 74, and if you report these differences here, and if you report the reason here, then you can, whenever you furnish your submissions in response to their allegations of section 74, section 74 deals with willful misstatement, intention to commit fraud, etc. and etc. So if you have stated here that there is a difference, and if you have justified the difference with reasons, then clearly it is not your intention that you intend to evade the tax. So this will it will give you as a cushion for responding to the show cause notices. So wherever required, you take this as an opportunity and report the reasons, report the differences, and close the matter. because it will help you in responding to the show cause notices. That is one point which I wanted to express here, because although it may look simple and people may think that reporting differences and reasons may be detrimental to them, it may go against them, but quite a lot of times it may also help them whenever the adjudication proceedings start, because it's a strong evidence against section 74. In one stroke, the case will be dismissed. So table 7, reconciliation of taxable turnover. Now this is coming from table 6 itself. So annual turnover after adjustments, it is coming from 5P, because 6 is reasons, 5P is your annual turnover after adjustments, which is matching with GSTR 9. And here you have to bifurcate under those turnovers on which tax is not payable. For example, value of exempted, zero rated, supplies on which tax is to be paid by recipient, etc. and etc. And this turnover has to be matched with 4N minus 4G of GSTR 9. So if there is any unreconciled taxable turnover, that has to be reported here. So basically it is trying to attempt to reconcile the turnover which is taxable and on which the tax has not been paid, or which remains unreconciled. So there is no relief available on these tables. You have to report all these tables here, and it is not a rocket science, because in GSTR 9 you have already reported exempted, nil rated. We have done a lengthy discussion. You have reported there. Zero rated supplies you have, on which reverse charge supplies you already have these details. You report here and close the matter. Okay. And if there are any reasons, you can report here, and that should be fine in filing GSTR 9C. Now coming to reconciliation of rate-wise liability and the amount payable, there are a couple of points which you have to pay attention to this. This is also a mandatory table. Relief has not been given. So it covers all the transaction on which a registered person has to pay the tax. It covers reverse charge and non-reverse charge. So those registered persons who have multiple rates, for them it is a bit of challenge. Why I am saying you it is a challenge? Because in GSTR 1 and GSTR 3B, there is no requirement to report rate-wise tax details. Is it not? There is no requirement. There are only two sets of data that you have to report. One is HSN-wise and one is documents, invoices issued. But rate-wise reconciliation, it is not required in GSTR 1, but it is required in GSTR 9. So therefore, at this stage, you have to rely on your books of accounts. From books of accounts, from various ledgers, you have to extract this data and you have to report this data. Okay. So this is required. And here the point is here. You look at this screen. So total amount will be auto-populated based on what you have filled up here. And total amount paid as declared in annual return GSTR 9. So in 9, I have shown you there is one tax payable column, is it not? There is a tax payable. Beside tax payable, there is a tax paid. Tax paid is freezed. Tax payable is not freezed. It is flexible. So therefore, now you see the wording. It says rate-wise liability. For example, if there is a turnover which you have not reported in GSTR 1, it has been missed out. But while filing GSTR 9, you have added the turnover. So because of that, there is a additional liability. There is an additional liability that has arisen. So that additional liability in GSTR 9, you have updated your tax payable column, is it not? So if you update the tax payable column, it will come here, and the same extra liability, whatever you have reported in GSTR 9, that also you have to mention here. So in 9C, you have to mention, and this also you have to mention. So these two tables have to match exactly. So last time when I saw the offline utility, which is being downloaded from the portal, that was showing some technical problem here. It was showing the JSON error, although these two figures were matching, but it is popping up with error saying that it is not matching. I don't know if that was a unique error or it is some technical problem, but there's no response from GSTN on that particular aspect. But if any of you are facing similar such problem, but that problem could be from the GSTN portal itself. Okay, but make sure this table ties up with the tax payable, and tax payable is a dynamic column. You can amend it. And reconciliation of tax paid, if there is an unreconciled payment, like this figure should match here, which is coming from 9. And if there are any differences, there is no problem. You can give the reasons for those differences. Okay, why you have not paid, you can give the reasons. Or rather, I would say these reasons will 100% it will come here. Reason is because this is only a liability. There also it is a liability. There will be a resulting difference. So if you have paid the amount through DRC 03, you can mention the reason here. Unreconciled payment is due to so and so reason. However, that liability has been discharged by the payment through DRC 03, and you can mention the ARN number also. So it will be very clear. So there is an additional liability, and the liability has been discharged by way of paying through DRC 03. So it will make the matter, or it will clarify the entire payable aspects here. So here again, I have explained you in my beginning, additional amount payable but not paid. So payable in the sense it is because of the extra turnover which is reported in table 5. That extra turnover could be genuine because excess reported in audited accounts. It could be genuine reason, but all it requires you is to report here, and but not paid. It says why it is not paid, because I am not required to pay, because in income tax I have reported excess turnover, but as far as GST is concerned, my turnover is perfect. And table 12 deals with reconciliation of net input tax credit, and it's a mandatory table. Like as you can see, ITC availed as per audited financial statements. So this is a challenge, but if you have done your GSTR 9 properly, this is not a challenge. You can extract ITC availed directly from GSTR 9 and you can insert here. And these two rows I will explain you. You see, for example, you have filed 3B for the financial year 2021-22. While filing 3B, you have also taken ITC pertaining to financial year 2020-21. Is it not? So therefore, what is happening now, the 3B figure, the ITC figure which is coming in 3B, that includes the ITC pertaining to last financial year 2020-21. So while filing GSTR 9, there is so much liberty not to report those differences. You can file as it is, not to report which ITC belongs to financial year, which ITC belongs to the previous financial year. But when it comes to GSTR 9C, you can report here. You can report here. So for example, ITC availed as per the audited financial statements. So this ITC includes the ITC belonging to last financial year. And this ITC includes the ITC which is taken in the next financial year. You can reconcile here properly and arrive at ITC availed as per audited accounts. And this ITC should ideally tally with your GSTR 9. So whatever is missed out in GSTR 9, you can cover up in GSTR 9C as far as ITC is concerned. Whether you show there or show here, so long as you report and reconcile properly, it should be okay. If there is any unreconciled ITC remaining after this, you can give the reasons there and you can close the matter. So this relief was available in 12C. Like 12C, the relief was available, but now this relief has been withdrawn from the current financial year. So accordingly, all these tables you have to fill up from the current financial year. Okay. And reconciliation of input tax credit expenditure wise, as I have stated earlier. So this relief continues to be there both in case of GSTR 9 and GSTR 9C. In 9, HSN wise, inward supplies of data is not required. In 9C, expenditure wise ITC details are not required to be reported. But strangely, in income tax, they are asking for details, or rather they have made it optional. This way or that way in income tax, it is not clear. But since GST is mother of this reporting, see, if GST has made it optional or GST has given the relief, then I sincerely believe there is no mandatory requirement as far as the income tax is concerned. So as I have mentioned in my comments, so this table is optional for financial year 2021-22, need not be reported. So reasons for unreconciled ITC. So it deals with any amount which is payable due to reasons specified in table 13 and 15. 15 anyways is optional. Table 13 is mandatory. So you have to quantify if there is an ITC which is excess taken, that has to be quantified and reported here. And any tax that has to be paid, reconcile reasons for unreconciled differences and amount payable on the difference, you have to report here. Okay. And registered person's recommendation on additional liability due to non-reconciliation. All the differences. See, if you look at the structure of this GST or 9C, so up to recommendation, there are reasons for unreconciled liability plus tax payable for those reasons. So this self-assessment has taken an additional step. What is this additional step? It is asking the registered person to voluntarily come out and state whatever tax payable as you are reporting there, what is your recommendation on that additional liability? Do you really recommend? So I will say I will not recommend. Reason is because my turnover which is reported as per audited accounts is incorrect vis-a-vis the turnover which is reported in GSTR 9. So therefore, the registered person will not recommend that liability. Hence, this can be reported as 0 and taken forward. And finally, at the end of GSTR 9C, there is a verification, and this verification has to be signed by the registered person. So now, 3 or 4 days back or 5 days back, they have also updated the 9C. Like last week, it was not updated. The old format was coming in offline utility, but 4 days back, I think 5 days back or so, they have updated the offline utility. The utility which is available now on the portal can be is the latest utility, excluding this auditor's verification part. Okay. So with this, I have ended my presentation. So we can move on to the question and answer session now. I will first take up the questions which have been posted on the.
Sir, it's under Q&A panel actually instead of chat box.
Yeah. Q&A. So the first question, there are many questions that have come up. Quickly, I will just try to cover as many as possible. Claimed ITC for 17-18 in 19-20, and also didn't mention anything about claiming ITC in future years in GST and 9C for 17. So now we decide to reverse the ITC. Please kindly clarify how to reverse ITC. So there is only one way. 9 and 9C for financial year 21-22 is not the right place for reversing this ITC. You have to pay through DRC 03. Whether 9C is applicable to government organizations, what financial they should attach if the organization is a local branch. See, basically, it is not applicable. Strictly speaking, it is not applicable. But in one of our client is a government organization, we have filed. But if government organization is providing services or supplying goods, not in the capacity of public authority, if they are paying the tax, then you may have as well have to file GST or 9C. So in case of income of the company is reduced to revenue recognition in the financials, in case income of company is reduced due to revenue recognition, whereas in GST returns income filed in the account in the invoice raising, how the same should be captured in GST annual return, since both will have. So now the question is, in my opening remarks, I have stated that you should always strive to find out what is factual and correct information. So in this case, if you believe that the turnover which is reported in financial statements is correct, and the turnover which is reported in GST returns is overstated, but at this stage you don't have the opportunity to really reverse the output tax liability. But there is a controversy on 30th November. If you are in a position to raise the credit notes now and reverse the output tax liability, you can reverse it. But 9 and 9C is not the right tools for doing that. Should interest earned from savings interest and be shown as exempted in income tax, it is not shown under PL. We had shown under IFOS. If shown in P&L, should we report the same? There is no proper HSN code for the same. So now the thing is, interest earned, whether you report or not in P&L, at the end of the day, it is an income you have to report in GST returns. So if you have not reported in income tax, it's a problematic. because the reason is it is income, the tax has to be paid on that. But from GST perspective, it is exempt. Whether you report or you don't report, it really doesn't matter. So while reconciling 8A and 8D, obviously their results is negative due to 8A is auto filled in from 2A on net basis as compared to 8B, which flows from 6B, which is gross ITC. How to mitigate this issue? So the issue mitigation happens only if you know what is included in 2A and what is included in 6B. As I have told, if you are able to find out the difference is because of ineligible ITC, or difference is because of ITC available but you have not availed. If you have good details about this information, you can mention there. If you don't have information, better you don't mention there. Rather, you put something in 9C. Or one thing I skipped to mention while discussing ITC in GSTR 9, like what the practice which we have followed, we have bypassed GSTR 2A reconciliation at 9 level. What we have done, we have independently done 2A or 2B reconciliation and kept those solid workings ready with us. And so long as we are comfortable with those workings, we have proceeded with filing GSTR 999C, irrespective of the fact whether our figures which are populating in 9 under 2A are different from the 2A reconciliation what we have done. So here what I would urge is you do independent reconciliation. Don't rely on figures which are auto-populating in 2A in 9. Rather, you download independently from the portal and do the reconciliation. And if you are comfortable with the matching of credits, unmatching of credits, then you can proceed with filing GSTR 9, although the difference may not match with your GSTR 2A. So invoice contains 5% etc. as outward supply. While filing one, invoice value is showing as taxable turnover, but when it comes to 3B, we showed 0%. Outward supply is nil rated supply, and all other amount is in taxable value. The problem is nil rated supply. Difference coming in GSTR 9, part 2, table 5E and G. Now you can rectify. So whatever omissions or additions which you have done in GSTR 1 and 3B, GSTR 9 is the best opportunity for you to rectify. Whatever is wrongly mentioned in 0, you remove it. Whatever is wrongly mentioned in taxable sales or taxable supplies, you can rectify now and bring it to 0. Okay. So table 7 titled as reversal of ITC for the financial year. If so, reversal done both in 21-22 and April 22 and November to be declared here. So no, table C only deals with reversals which you have captured in 3B. Because if you look at the structure of 7, it starts from the data which is auto-populated from 3B. So then you go on reconciling the data. So therefore, in my remarks also I've told you, when you're doing this, you should know the ITC which is taken in 3B, you should clearly know whether it is a gross ITC, whether it is a reversed ITC, if it is a reversal, how much is the reversal, etc., etc. So as far as ITC reversed in next financial year is concerned, there is a separate table, 12 and 13. Okay, in 12 and 13 you can report that, but that is optional for this financial year. I would rather advise you to escape it and report it in GSTR 9C. So how to show turnover achieved through e-commerce operator, as tax on the same would be remitted by ECO directly. Sales, see, I think you are referring to the restaurant sales. They have clarified also that has to be reported under exempted supply in 3B. In GSTR 9 also you have to report that sales as exempted supply. Should sale of unlisted shares be shown as non-GST supply? If it has to be shown, then for a taxpayer whose aggregate turnover less than 2 crores, should we file GSTR 9 showing the sale of unlisted sale in non-GST supply because the same was not reported in 3B? Yes, I fully agree with you. You have to consider sale of unlisted shares as part of aggregate turnover, because the definition of aggregate turnover includes turnover resulting from non-GST supply. Since unlisted shares do not form part of definition of supply of service, so it is a non-GST supply. But for filing GSTR 9C and calculation of threshold, that matters. And you have to file 9 and 9C, and you have to report these turnovers under non-GST supply. Previous year ITC claim during the current this year, where it should be reported in GSTR 9. I think under table 6 itself, GSTR 9, 6H or 6M, I could not recall. You can see my PPT also. There is a separate column where it shows ITC reclaim during the current financial year. But again, with a disclaimer, I am saying you should see what you have done in GSTR table 3B. Because if you have not reported this in 3B and if you try to report in GSTR 9, it may boost your ITC in 9 vis-a-vis your 3B. So you should be very cautious. Sales returns in excess of sales during the month reported as ITC in 3B due to no provision to report negative figures in no, you sales return, you should always report this as net of sales. In 3B, first row itself, 3.1 itself, you have to report. But instead of reporting it, you have reported under GSTR 4 as ITC. So now the question is whether you can rectify that in GSTR 9. I would suggest it's a very good opportunity for you to rectify the same in GSTR 9. What you can do, see, I will tell you the solution. You can make a note of it. While reporting outward supplies, there you report net sales. After credit notes, after issue of credit notes, you report the net sales. ITC, you remain silent. You go in 9C. In 9C, you show the share. You give the reasons for unreconciled ITC, stating that this is because of wrong reporting of ITC in 3B. This will save you from show cause notices. If 100 rupees was total ITC availed in 21-22 in 3B, and of this 20 was for invoice for 2021, should we show this 20 in table 6 or also 14 as showing in this in table? See, that's what I told. See, if any ITC of last year is populating in 21-22, and if you are clear that there is an ITC coming here, I would suggest you escape at 9 level and report in 9C level. I have explained you in 9C, there is a separate row in plus or minus, and it has to be filed in 9C. Few suppliers did not file their one and not paid the GST. Now suppliers are absconded. ITC is very huge amount. What is the solution? If up to not paid in GST means there is nothing can be done, because it is mandatory that they have to pay the tax. Otherwise, the ITC which you have taken is ineligible ITC, and you have to pay the ITC, and you have to claim the ITC from the suppliers who have absconded. So voluntary payment and sales figure shown after March 2022. So is it enough to show tax amount payable in table 14 alone, or should be shown in 9 also? No, you can show in 9, because at the end of the day, when we are filing 9, we are reconciling all 21-22 figures. We are reconciling 21-22. There we have to mention tax payable. But again, in your 9C, you can mention give the reference of DRC 03 and explain the reasons there, and state that you have paid the tax. Where to show 2021 purchases? This I have already explained. How to show SCC supply in HSN summary. When I give HSN code, it takes applicable tax rate. No, zero tax also it takes. There is an option you can see. In fact, the first rate itself is a zero rate. You can show there. In part 4 of 9, tax liability payment through cash and paid through my client has paid instead of IGST 1 for 1 bill, and it is corrected in GSTR 1 and not in 3B. So there is a difference in tax liability as per table 4N and table 9A. What do you recommend? Is in this, should I show correct amount in table 9N and also the net difference is 0? Should I suggest? No, the thing is, see, this problem on payment of tax has to be rectified at 3B level, not at 9 level. At least at 9 level, you show the payable amount correctly, and against that payable, say for example, CGST is short paid, because that CGST, SGST amount has been paid in IGST. So you should claim that IGST which is wrongly paid as a refund from the department. But at 9 level, whatever CGST that is not paid has to be paid. What happens if we show ITC claimed as unreconciled ITC in 2? So I would suggest you experience and see what will happen. But at least in Telangana, they are trying to issue auto show cause notices, and they are formulating some formulas. So rather, when an option is given to avoid it, you rather avoid it rather than there's a lot more work that has to be done. So there is no work, there is no time to look into what is optional now. 17.5 reversal wrongly shown under 42. Can it be corrected? Yes, it can be corrected in GSTR 9. Of course, you can do that. So because in 3B, the old format, it was not particular. Because if you look at 3B, A and B. In B, the first row was as per rule 42, etc., etc., and there is others. So the difference between ineligible, 42, etc., is a blurred. So most of the people, they have done it. It is very common mistake, but in 9 you can rectify. There is no problem with that. One of my client who is LLP is also considered a body corporate, stating that remuneration paid to partners attract RCM as per 13/17, supply of services by direct. No, LLP is different from the private limited company. The RCM line item as per notification 30 is applicable only to directors. 9, table 6 ITC imported from 3B is gross ITC and credit note issued by supplier, where we need to report in GSTR 9. In GSTR 9, others, as I have told in my comments also, the other reversals you can mention there, credit notes issued by the suppliers. 2 GST and 2 TS and AP, total turnover of the company is 7 crores, no sales in TS. Still, yes, you need to file GSTR 9C for TS also, because aggregate turnover is calculated on PAN. What has to be done for excess claimed ITC in 3B, then the actual ITC. Excess ITC claimed in 3B, you need not worry. It will be carried forward in, excess claimed ITC. Then obviously, it seems that you have taken excess in 3B, you have to pay back by filing DRC 03. GSTR 9 is the best time. If you have discovered this error, you pay in GSTR 9, sorry, through DRC 03 and report the same in GSTR 9C. Sales declared in 22 March, but it had got cancelled in April 2000. Has hence credit note done in April to in GST. However, the liability is not reduced in GST as there was no liability. How should we get back that amount? No, there is no chance, because the reason is you had chance up to October 2022, but as I've told, there is a controversial amendment of 30th November. If you look at section 34(2), it has inserted November against September verbatim. So if you want to get into litigation, you can raise the credit notes, offset the liability in the current 3B and claim the benefit, but you will get the show cause notice and it may go up to high courts. So whether HSN codes have to be reported for exempted turnover like interest income and non-GST supply? Yes, of course, because when you are reporting HSN, see, I will tell you, when you report HSN, the total turnover should match with your B2B, B2C exempted. So obviously you have to mention there. So what is the trouble in mentioning HSN codes for exempted turnover? I don't see any trouble at all. For individual GST registered persons, whether share, sales value, share of profit, salary from the firm has to be reported as non-GST turnover in GST. I don't think so. The share in profit is a turnover. I don't think so. This need not be reported. So I think you are talking about individual returns where in while reporting in IT returns, you report share from partnership firm. I don't think so. That has to be reported. Absolutely. Share in profit is not at all a turnover. In GST 9, table 8, serial number E and F, ITC not availed in ITC. Is it mandatory to fill this form? See, as I have told, even if you don't file, it will accept. But try to understand my point. If you are not sure about the figure, it is rather better to take the risk of not filing than filing and reporting an incorrect figure. You understand my point, no? So if you are sure about the figure, you happily report there. If you're not sure about the figure, then why do you want to take the risk of reporting something which is wrong and you're not sure? Table 6 of 9, ITC availed during 21-22. ITC corrections for financial made in 3B up to September 22. Do we include? I've explained about this in the previous questions. With reference to my earlier question, if the consideration for the sale of share considered, then also AO2 is less than 2 crores, there is no need to report. I've in my opening comments only I've told, if it is less than 2 crores, neither 9 is mandatory nor 9C is mandatory. Where to show sales of creditors or reported in 21-22 before September 2022. So I don't know what you are trying to what you are trying to explain here, because what I could understand, credit notes of 2021 reported in 21-22. So before September 2022. In GSTR 9, whatever you have reported there, that will come up in your B2B, B2C credit notes, etc. and etc. And it will come up there. So what is the trouble there? I don't see any trouble. Okay, so there is no need for reporting any separately. The only thing which you have to report is for the sales pertaining to 21-22, if it is reported in next financial year, 22-23, that has to be separately reported in 10 and 11. One more common query among our friend circle is 9 is filed by taxpayer by 8 less than 2 after the due date. Does it attract the late fees? That I am not sure. I have not tried. Maybe you can try and see. If actual ITC as per 2A is higher, but table 8 shows lesser value, actual ITC as per 2A is higher, but table 8 shows lesser value. What should be done for the same? It depends on what 2A is included, what 8 is included. Unless and until you know what is the composition of these two figures, you cannot decide what needs to be done. So I have answered all the questions. If there are any further questions, you can raise the hand and ask, and then we can take it forward from there.
Thank you, sir. And 3 persons, those who have raised the hand, let us put them. Not so, we'll wind up the session. So, for any questions, they can post it to your mail ID. In time permits, you can respond, sir.
Sure. Yeah.
And
there are someone who are raising hands. You can open the mic if they want.
Yeah,
to
I have
ask.
opened it, sir. I have opened it, and they can unmute themselves and they can post a question.
Whoever wants to ask question, they can unmute and can ask.
Yes, yes, yes.
Yes, please. Yes, Ms. Sri Lakshmi.
No, they have enabled, mic is enabled. They are also given option to unmute. So, see if there's any question. Q&A panel, there's one question for up. It's
So one last question, interest income not reported in 3B for 21-22, can we consider the same while filing 9? So tendency for getting show cause notice is less. No, see, tendency of getting show cause notices or not is something else. That is another factor. But again, when you have to reconcile your turnover, it is better you report, no? What is the problem there? You can report the turnover there and close the matter.
In that case, we'll wind up the cycle, sir. Since there are no more questions, thank you so much for your time spent here and SIRC for this knowledge dissemination on this topic on SIRC sector, sir. On behalf of Chairman, Secretary, and Office Bearers in their absence, we thank you so much for your time spent here on.
Thank you.
CP session.
Thank you.
So we look forward to have you for a physical session or any online session in the future.
Sure. Thank you so much.
If there's any questions, we'll post it to you, or maybe when time permits, you can respond.
Sure. Yeah.
Thank you.
Okay.
Thank you so much.
Okay. Thanks you one and all. Thank you all.
Thank you, sir.